Hello everyone. In today's video, I'll go through what validation and invalidation mean regarding patterns. Understanding this concept will help elevate your skill as a trader. Knowing whether patterns are working out or not is essential so that you can have better entries, exits, and stop loss placements. By the way, click the subscribe button and hit the notification bell so that you know when I release new content. Okay. Before we take a look at where patterns are validated and invalidated, we have to understand what patterns are. Okay, so let's take a look at this five-way structure here. From what we learned from earlier YouTube episodes, we know that this here is an impulse, a correction, an impulse, correction, and yet another impulse. Okay, but where do the patterns come into the picture, right? Well, these corrections here are essentially our patterns, because in the real world, the price action doesn't move this smoothly here, like these straight lines. You will never see this in the market, okay? In the real world, it moves way more erratically, and sometimes even extremely randomly, right? Comes up, can create all kinds of patterns and structures here that we have to learn to read and understand. So this is why we use patterns as a framework to understand all this data, okay? Like all this data here, right? In this way, we create a visual context of what might be happening and possibly can happen. But first, let's start with some basics. So, what do we know about an impulse? Okay? The thing is, we want to learn how to identify an impulse and these patterns so that we can catch the next impulse going up or down. Doesn't really matter whether it's an uptrend or downtrend. So let's look at these basic rules here. Okay, and actually before that, I want to just clear some things up about the terminology. That often when people talk about a correction, that's basically just a pullback. That's the same thing. It's like a way to categorize it. And a corrective structure or a pullback can develop into a variety of patterns. So this here is a corrective structure because it goes counter trend to the prevailing trend here, and also known as a pullback, right? And whatever develops in here then is a pattern, is a corrective pattern. Okay, let's get back to these rules here. An impulse is validated when the top or low of that impulse is broken. So what does that mean? That means that when this top right here of this impulse, right, market pushed up, it came down, and then it pushed up. It broke this top here. That means that this move up here, take a look. This impulse here becomes validated when we break that top. Oh yeah, and disregard these numbers, they don't mean anything. So next rule, or these are more like guidelines, but yeah, take them as a rule. Every piece of price action inside that impulse is considered a correction. So what do I mean by that? We have an impulse here, and everything inside this piece is considered as a correction, okay? Unless or when we take this top and break it, then we have an impulse that's validated. But as long as we stay here, it's a correction. See, if this comes down and breaks this low, then we don't have a pullback any longer. We don't have a correction to go up. Something else is happening in the structure, and we have to figure out what that is. but that's for another video. Right now, we're looking at this piece of information that states that every piece of price action inside of an impulse is considered a correction until otherwise is proven. Okay, so let's remove these for now. We don't need this any longer. And so let's talk about validation and invalidation. What does it actually mean? What is validation and invalidation? It depends strongly on the degree of the structure. So there's a process to it. And this process is, let's write down here, okay? Overall context of the market. And then we look at patterns, scenarios. Then we take a look at intraday context. And then we trade and manage the trade. Okay everyone, let me explain to you why this process here is important to understanding validation and invalidation. So you want to learn to identify these patterns here, or these corrections here, and by doing so you want to catch the next impulse, because if you learn how to identify when this pattern ends, then you can catch the next impulse. So it all starts with knowing the overall context of the market. Let's take a look at this here. Let's do something like this. This is fine. And remember, again, just forget about these numbers. Okay, so in this point of time, we have a trend. We have an uptrend here. That's like our overall context of the market. This is an example, and I'm just keeping it simple. We have a move up, have a correction, and we have a move up. This is enough for us to have an uptrend. So we get a pullback. Our bias at the moment is for this to continue up because we are in an uptrend. So we're looking for a continuation pattern to go up. That's step one. Then we look at patterns, at what is actually happening here. Let's move this up here. So so we have a bias, we bullish, then we take a look, what is it actually happening inside? What is the pattern doing? Patterns, think of patterns like they're templates. You have different kinds of templates. For example, a regular flat could happen here, or a running flat, or expanding flat, all these are just templates. They're not certainties, because we deal with probabilities here. So don't attach yourself to one single pattern and think that it has to happen. That's not how trading works. That's how you get into trouble and problems and lose a lot of money. So for the sake of simplicity though, when you're looking for a pattern, you always begin with you always begin looking for the most basic corrective pattern. And that is a regular flat, which looks like this. And then as you get more price data on your charts, then you have to identify what is happening in the market in real time. You have to trade the price, not your bias. So back to patterns. Let's say that this is what you're gonna look for. The most basic pattern is a regular flat. So this is your analysis, and therefore you're looking for the price to break this low and then reverse. When do you know when the pattern is finished and ready to go? In other words, validated. Well, no one knows with certainty, but because we can't read the future, So this is where the intraday context come into play. You have to figure out who's in control intraday and look for confirmations that the pattern is starting to turn and validate itself. Let's say that this is what we have, and we're looking for a regular flat because that's what is the most basic corrective pattern, and we just, for sake of simplicity, that's how we begin our analysis. And let's say that the price actually comes down here, breaks the low, which is one of the requirements for a regular flat, and then we want to see it go up, right? So this is where you have to set up some variables that guide your decision making. For instance, one variable could be that the candlesticks start wicking in this area, and you get a volume spike. That suggests that a lot of people are interested in this area. That's one validation, one confirmation that price might react and start going up. Another variable is that price is bouncing off previous highs. A third variable is that price starts, this is more of a clue, price starts trading back inside this area again, which also is signaling that buyers are coming into the market. So you can see that there are many ways in which you can validate this pattern, but you have to validate it in like steps. Take it in steps, because we can't read the future. You will actually only know when you have a pattern after the fact, when the pattern has created itself and has broken this top. Then you know with certainty that this pattern is validated. But you want to find and position yourself earlier so you have good risk reward opportunities. This is why you need to take it in steps. You look at the overall context of the market. You look at the overall context of the market, create a bias. Then you look at patterns, what patterns could happen. You look at different scenarios. But remember, you start with the most basic, simple pattern, which is a regular flat, and then from there you adapt and change your analysis as the price data unfolds. And then intraday context, you go down to lower time frames and you look for clues and signals and validations, confirmations that can give you or tell you that, hey, this pattern, it's actually working, it's starting to go up. And there are a lot of tools, as I mentioned. Higher highs, higher lows, it's coming back into structure. You can look at VWAP, you can look at some volume analysis. For example, this impulse, where's all the volume? Where does it lie? This is where price could react and bounce from. So that's how you have to look at it. So I'm gonna end it here. But if you want to learn more about this way of trading or this style of trading and want me to make more videos of this kind, make sure to hit the thumbs up button and comment below to let me know what you would like to see more of. Thanks for watching.